Hey guys, Rafa here from the Endgame Investor, and today we are going to be talking about silver. As all silver bugs are probably aware, we are in the middle of an impressive rally that started in early November, and we are now at a pretty critical technical juncture that I want to explain in very basic terms. I am not a technical analyst, but I do pay attention to very, very basic technical signals. And what we see on the daily chart here of silver since June is textbook resistance support with the moving averages acting as guidelines. Here you see in this first rectangle here, since the hiking of the reverse repo rate from 0 to 0.05%, we had the 200-day moving average as a support, which we kept knocking on for about a month, it looks like. Then we broke through that in July. Then it became resistance in around August, and we broke through that again. And then we tested that resistance at the 50-day moving average over here in this rectangle, and we kept falling. Now here is exactly where I took a delivery of my silver warrant for 5,100 ounces of silver on September 29th. I was fortunate enough to catch the exact bottom because this was delivery day. And since then, the warrant has been going up and up in value. Thank God. Here, we broke through resistance at the 50 DMA, and we bounced off of it strongly. We retested that resistance here, and since then, we've been going up, and now we are at meaningful resistance again at the 200-day moving average, which we have not overtaken since August. That is where we are now. I don't know if we're going to have a rally that breaks straight through this line, or we're going to have a rest, but eventually we'll break through it. Just got to be patient a few more weeks if we head back down again at this resistance point. Now let's look at the weekly charts. The weekly charts show something very similar. First of all, we have the 50-week moving average here at the same time as we were using the 200-day moving average as support at this point in time. It was also the 50-week moving average, which was support, and we broke through that support here, this rectangle, and we established what at that point was a triple bottom, first, second, third. It became a quadruple bottom over here, did not break through that on the weekly closing charts, and now we are back at the 50-week moving average over here, which we are testing at 25.35 on the futures. So we have two big resistance lines here, the 50-week moving average and the 200-day moving average, which just happen to be the same line. Now, this is the Comex warehouse stocks. You see here the peak. This is around February 2021, when famously the Silver Apes began their physical attack on the markets. I wouldn't say physical attack, their attack on the physical markets. They didn't physically attack anybody. Looks here to be about 152 million registered ounces of silver in the Comex Vault. Since then, we are now at 95.84 million ounces. So that's about 56 million ounces taken out of the vaults. That is a very big accomplishment. And we are down to the 2018-2019 peak here, which is almost around the 2008 peak as well. This is a very big accomplishment. Keep going, keep buying physical silver, and whether you buy it from the Comex or any other dealer, eventually the fungible supply has to be replenished. So it doesn't really matter where you get it from. Now I want to talk about premiums.
Premium! Dude!
We have here in the light of silver squeeze as well. The premium on the American Silver Eagle looks to be around 30%, 30.35%. Now we see here in 2008, we had a record on silver premiums, on physical silver premiums. It was about 75% because that was a monetary freakout, but there was no silver squeeze movement right back then. So eventually the premiums went back down to historical norms. This time we had a freakout, monetary freakout on March 2020. We all know about that. Then premiums started to fall again, down to around February 2021 when they were 15%, and then the Silver Apes had their physical party on the physical markets. And since then, premiums have rocketed from around 15% to 30.35%. That is a doubling of the premium in only a few months. That is a huge accomplishment. You just got to keep going. And I want to correct what I've been saying on this slide and put this into people's minds. There is no such thing really as a physical premium on silver. It is not a physical premium. It is rather a discount on paper. The futures are discounted. Why? Because it is almost impossible to get supply from there. I know, I've been through it and I'm still trying. So we got to stop talking about premiums on physical and start talking about discounts on futures on paper silver that isn't even really physical. You can't get anything out of it. The real price of silver is the price it costs to acquire a physical coin and put it in your hand. It is not the price of a futures market, which will eventually collapse. Next, this is important too. This is the gold to silver ratio. Silver, in terms of gold, has not been falling since the gold high in dollar terms in August 2020 of around $2,090 an ounce. We are at the same price of silver in terms of gold as when gold was at its high in dollar terms, which means when silver to gold is steady, that means there is demand among the public for real money, because the public's money is not gold. Gold is bank money. Public money among consumers is silver, and I will show you more evidence of this in the next slides. That the gold to silver ratio has been steady as gold has been falling in dollar terms means that this bull market in precious metals is not anywhere near over. Now, how can I show you on two charts that silver is money when consumers get scared? Look at this long-term chart. The blue line is the silver price. The orange line is the US index of consumer sentiment. Consumer sentiment tends to collapse when consumer price inflation tends to spike. When you have low consumer sentiment, why do you have that? Because the power of their money substitute, their fiat dollars, is falling very fast. So what do? They dump them for real money for the public, which is silver. And here we see the 1980 spike in that first rectangle, precisely when consumer sentiment was at all-time lows. We see the same thing over here in a minor little bump in 2008. And we see a major one again in 2011 when consumer sentiment tied that low, when the dollar index was at a low. Again, we see consumer sentiment at a low. They're looking for real money, so they go to silver. And here we have consumer sentiment again falling at a low since 2011, and we haven't really seen the silver rally yet. But as consumer sentiment continues to fall, as consumer price inflation continues to rise out of control, the public will once again turn to silver, as they always have. You just have to wait and be patient. Here is the same chart taken from Trading Economics. You see the same thing. Here's the 1980 spike. Here's the 1980 trough in the blue line in consumer sentiment. Same thing in 2011 over here. And we are getting ready for another run in silver. Sometime very soon, it is coming. Now here is one more chart to show you exactly where we are from a monetary perspective. And this little rectangle that I made, that is the beginning of QE1. The red line is the money supply, M2, all money in all banks in the US banking system. The blue line is the amount of money in checkable deposits in households. These are consumers, not business accounts, not Google's cash hoard, not Apple's cash hoard. This is consumer accounts, their spending power. So you see during the 2008 QE1, when it started, you see this little blip in the red line up, and you see a blip in the blue line up a little bit as well. The reason that we had a deflationary collapse in 2008 is because consumer spending power in 2007 was at all-time lows over here by this chart, because everyone was engaged in house flipping, and then all their houses went down and they ran out of cash. But now what has happened here in this tiny rectangle, we have the repocalypse, September 2019, when repo rates went to 10% and the Fed lost control over short-term interest rates. That's when the money printing began, not during the COVID apocalypse. But we do see that the pandemocalypse hyperinflation in terms of the money supply, almost all of it is going into checkable deposits for households, meaning household spending power has rocketed by what looks to be about $2 trillion since the massive money printing started. If you're wondering why the quit rate is so high, if you're wondering why shortages are so prevalent, if you're wondering why nobody can find workers, it's because everyone's bank account is so flush with dollars in cash that it's hard to find workers to actually produce things. And this is what is leading to shortages. And the fact that all this money is still growing in household checkable deposits means that the inflation, the price inflation that we're seeing, has barely even started yet. We ain't seen nothing yet. Silver is about to go ballistic. Exactly when, exactly how much, I don't know. I'm just going to tell you that it's going to be very fast when it starts.
If I could save time in a bottle.
This is Rafi of the Endgame Investor. I'd appreciate your support by signing up for a 2-week free trial of the Endgame Investor, where you can get my reports on the gold and silver markets and other things monetary. And if you want extra content from me on my biblical research from a libertarian perspective, please sign up as my patron at my Patreon link below at the Endgame Investor. Thanks, and I will see you next week for next week's Silver Report.
Ain't seen nothing yet.